You've said that you can open up mortgage lending to how many more millions of Americans, you think?
So we score about 40 million more people than the other commercially available models, and about 10 million of those are the 620 and above. And I picked the 620 because that's pretty much the minimum for a FHA loan.
So you're saying that you can expand access to 40 million people, and only 10 million of them are in traditional, like the credit-worthy cutoff.
Hi guys, the credit game is changing fast. I remember a time where if you tried to use Credit Karma scores to go get a loan, you would get laughed at. Well, all of that is beginning to change. In the third quarter of 2024, the United States government is considering using Vantage scoring model. And that's the scoring model that Credit Karma and most of the free institutions use, but they was worthless once upon a time. Well, that is about to change. Very soon, you're going to be able to get a new home loan, a new business loan, or a new auto loan uses your Credit Karma scores. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allows you to put your credit repair experience into your own hands. If you're new to the channel, I'm super excited because I have a banger. Today's video, we're going to talk about the Credit Karma algorithm being implemented to the credit model. But before we get into the video, guys, please like, subscribe to the channel. It allows YouTube to push this content to a wider audience and allows us to leave the lights on. Guys, please like, subscribe to the channel. If you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to creditapprove.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to creditapprove.com, check out the software, and start removing these items, guys, if you have anything derogatory on your credit report. Now, let's dive straight into the meat and potatoes of this video. Guys, this video is going to be very interesting to say the least because it is a dramatic change that's actually moving forward in our industry, and it's very interesting to say the least. Now, for the most part, the Vantage scoring model has never ever held any weight when it came to market share towards FICO. FICO has dominated this industry for such a long time that no one even thought that this was even possible, where another scoring algorithm could actually come in and get market share for lenders. Usually lenders like to trust who they actually always trusted. If it's not broke, don't fix it. But the United States government is basically changing how all of that works. And also the Vantage scoring team, I seen a video of one of the executives talking about competing with FICO, and the guy didn't seem like he was messing around. Guys, look at it.
You have some pretty powerful backing, which is also one of the criticisms of your new way of doing business here. Equifax, Experian, and TransUnion, those are the big three credit bureaus. Explain their role in my Vantage score.
Well, they give us strategic direction, and we have access to large amounts of data, anonymous data, and funding and capital. So we're going to be around for a long time. So there's an advantage there. However, we're very careful about antitrust issues. They cannot tell us what to do every day, and we're independently managed. So we create our own decisions and do our own model development.
Right. A lot of people might not know that when those credit bureaus have to deal with the FICO score, they're dealing with an independent company, Fair Isaac Company, a company that's done extremely well, by the way. Their stock is up like 500%, 6 times over in just the past 5 years. Are you effectively trying to end FICO's monopoly on my credit score? And why? What impact will this have on people trying to get a mortgage?
So to your first question about ending a monopoly, we want to compete. One of the reasons we started was to compete with FICO, but the market's large enough for both of us and for other market developers, score developers. And so we believe the competition, we come out with more products, more features, more benefits, and have the competition follow us.
You've said that you can open up mortgage lending to how many more millions of Americans, you think?
So we score about 40 million more people than the other commercially available models, and about 10 million of those are the 620 and above. And I picked the 620 because that's pretty much the minimum for a FHA loan.
So you're saying that that you can expand access to 40 million people, and only 10 million of them are in traditional, like the credit-worthy cutoff.
At a 620.
Right.
And of those 10 million, about 2.4 million are African Americans and Latinos that cannot otherwise get a score. So not all those 10 million will probably be house ready or want to buy a house, but that we're talking about millions more that could qualify.
And the way you do this is by needing only about 4 weeks of activity, whereas FICO traditionally needs about 6 months to establish a credit score, and those kinds of innovations, right?
Correct. And as a former lender, you'd say, well, how can you create a score in 1 month's usage? So we tested that data with vast amounts of data, and guess what? The new scoreable score, their probability of default, which is what a score does, measure probability of default, is about the same as long-term borrowers. So it's an incredibly accurate score for this.
We're almost out of time, but why did they flip-flop? Because it looked like FHFA was actually going to make sure that the people couldn't use a Vantage score, and then all of a sudden, the last couple months, now they have to consider it.
Well, the new director is following the law, and we're very grateful to that. The former director was not following the law in his proposed rule.
Well, we'll see what impact it has as it's rolled out. I know it could take a couple of years. Barrett, thanks for joining me.
Thank you very much.
Barrett Burns is the CEO of Vantage Score Solutions, which you'll be hearing.
So as you can see, guys, that guy is not messing around, and he actually means business when it comes to making a mark when it comes to how lenders evaluate credit reports. Now, I don't know if you understand the differences between Vantage scores and FICO scores. So let me bring up this article so you can get a visual step-by-step on what it takes to have a difference of scoring models. So as you can see, the FICO scores are generally calculated using 5 categories of information contained in your credit reports, with a varying weight given to each, right? So we have your payment history, which is 35%. Then we have your utilization, which is 30%. Then we have the credit history, 15%, the mix of credit accounts, 10%. And then we have 10% for your new credit accounts, right? And then we have the Vantage scoring is calculated with 6 categories of information contained in your credit reports. It doesn't assign percentages to how much weight the categories are giving, but instead describes their level of influence. So the payment history still have extremely high influence. The credit utilization is a high influence. The length of credit history is a high influence. The amount you owe, moderately influence. The credit behavior, less influence. And the available credit, it has less influence as well. However, there are some differences between the two to highlight. To have a FICO score, consumers must have 1 or more credit accounts that have been open for at least 6 months and has been reported to 3 nationwide credit bureaus within 6 months. Vantage credit scores can be calculated if consumers have 1 or more credit accounts that have been open for at least 1 month and 1 account reported within the past 2 years. So basically, to me, Vantage is actually looking to build on the trajectory of how consumers are spending their money and the available credit that they can hold. See, FICO has been using such an old algorithm, and they update the algorithm, and they are looking to compete with the new Vantage 4.0 system as well, with the new FICO 10T system, and the T stand for trending, and that algorithm is similar to the Vantage algorithm, say the least, but Vantage seems like they are more focusing on the consumers that has been left out. There's so much money left on the table when it comes to these type of algorithms for people that's not able to obtain credit or credit products, and they 100% can qualify, meaning they have the affordability to afford these type of products, but these products are not afforded to them because they don't fit a old, outdated system, which is FICO. And with this new system coming into fruition, I think that is great for the industry because it is so many people that have already been X'd out when it comes to home buying and things like that, only because the interest rates has basically pushed them out. If you can open the demographic a little bit more to allow new consumers that actually can afford it using new type of data points to calculate what they can afford and what they can't. If they can't afford it, they should be able to buy it and enjoy it. Life is too short for us to have to go through hoops and hurdles and work so long for us to only be able to afford what your old algorithm deemed us to afford. And I like like it, to say the least. And I like the fire that VantageScore, the Vantage scoring team, is using to push this new technology forward. And I think it's great. Now, the Vantage scoring system was created by the three bureaus to compete with FICO. They was created by Equifax, Experian, and TransUnion, and they created that free scoring algorithm to compete. Now, they have 40 million consumers that they have data on, meaning that they have collected a lot of data to prime the algorithm for new consumers to actually get and obtain new credit. And I think that is a great, like I said, step forward, because they are also saying 35 million of those people could afford homes. Now, they have 40 million people with data, but they say 35 million people can afford credit items that the lenders are not giving because they are using a FICO system. So guys, let me know in the comment section, what is your, don't tell me in the comment section what is your Vantage score, but let me know, is your score different on FICO than it is Vantage? Is it dramatically different? Will the difference allow you to go into a different bracket of credit where it can allow you to actually obtain new levels of credit and get new levels of a lifestyle? Because credit can change a lifestyle very, very fast. So look at this article as well. ABA Banking Journal released an article a few weeks ago, and it's basically talking about the FHFA's Office of Housing and Community Investments and how they are looking to use this technology moving forward. It says officials also discussed the transition to FICO 10T and VantageScore 4.0 credit score models, as well as the move from requiring 3 credit reports to 2 for single family homes. So they're basically saying that they are looking to, instead of using 3 scores, 3 credit bureaus, they're looking to use only 2 credit bureaus to make a determination whether you are available for a single family loan. Dan Fisher of FHFA, senior advisor for capital markets, said the approach is built on better data. Like I said, this is better data that is more accurate, more predictive. So they are basically seeing so much money left on the table when it comes to consumers and their availability to different credit and loan items. And I love it. Let me know in the comment section, like I said, how you feel about it. He also said, we're in the process of having an enterprise publish 10 years worth of information on all of their single family orientation on loan deliveries. Fletcher explained, from 2013 to 2023, every single family loan they purchase are run through the 2 new models, and you can effectively see how those loans would have been scored had the new models been in place at the time. So basically what they're saying is that more people would have been able to afford more loans if these new models was being implemented early on. He also said that FHFA will have data on VantageScore 4.0 model out by the middle of this year and the FICO 10T model shortly after. So guys, this is great news for the credit industry, because a lot more people, like I said, is going to be able to obtain a different level of credit. Some people get stuck with credit and have credit and deal with credit for a very long time because they be stuck in a certain tier. They stuck with $500 secure cards for 20, 15 years, and they don't know how to transition to get, you know, a home loan or, you know, a business loan or an auto loan. They don't know how to transition and actually scale up because the FICO system is holding them stagnant, even though they possibly could afford a different credit or a higher tier credit item. Also, the Federal Housing Finance Agency also released this. I wanted to go over this as well. It said on February 29, 24, several updates related to the implementation of the updated enterprise credit score requirements. Following extensive stakeholder input, FHFA amended their proposed implementation timeline to align the implementation of the bi-merge credit report requirement with the transition from the classic FICO model. So guys, they are transitioning from the classic FICO model and going into a more diverse model, and you might qualify. Let me know in the comment section, how do you feel about this? Do you think that this is a move forward in the credit industry, or do you think that the FICO scoring model is built to last? Let me know in the comment section, guys. And also, let me, if you have any type of credit issues going on with your credit, if you have any inquiries that need to be removed, chargebacks, collections, go over to the creditapprove system. We are there to help you. If you want to talk to me and my team, set up a free consultation. I will jump on a call with you and we will talk about whatever you need to talk about step by step. Guys, until next time, take care of your credit and take care of yourself. Credit Coach Q out. Peace.